B, as promised, is the next company we're speaking with. Numbers were a bit subdued. Business momentum has slowed down. Margins are a bit under pressure. Net interest income has also seen some muted growth, which has come in the weakest in about 13 quarters or so. Ashok Chandra is Managing Director and CEO at Punjab National Bank. He's with us with what to make of these numbers. Mr. Chandra, good morning, sir. Thank you very much for your time. Prashant here.
Good morning. Good morning.
Good morning, sir. My question is exactly that. As I sort of preface my introduction, business momentum has slowed down. Could you tell us what is keeping loan growth tepid? What are you seeing in the marketplace?
Before I answer your question, just give me a few seconds. Through the channel, I express my sincere gratitude to all my 1 lakh plus employees working from the the guard and the armed guard, the service staff, customer service associates, and all the officers in the bank, 18 crore plus customers, and all the investors who have reposed faith in our bank. Now, coming to the specific question, I think if you see our growth in the entire year, we have grown at the speed of around 14% plus now. Overall growth is 14.03%. And specific, if I talk about the global deposit, that has grown by 14.38%. And global advances, that has also grown by 13.56% YOY. So I think on all the business front, I think bank has done exceedingly well. Even the RAM sector also, if I can talk about.
Okay, yeah, so on that point, in terms of what you've guided for the next year, from about, for the full year, 14% credit growth, you now expect it to come down to about between 11 and 12%. Could you give us some context?
Yeah. Guidance, in fact, last year also, we had given the guidance of 11 to 12%. And we have crossed that guidance and we have touched the growth of around 14%. This year also, our guidance is in the range of around 11 to 12%. And we are very hopeful that definitely we are going to cross this guidance. See, guidance always we give to see that we are going to meet those requirements. There are 14 parameters we have given the guidance. And I can give you the confidence that in all the parameters in 25-26, we are going to cross the guidance which we have given to the market.
All right.
And if you can give me time, I have a strong figure for those things. We have the backup for this guidance and the growth which we are projecting this year. If I can talk about the credit, we have around 85,000 crore of sanctions which we have done last year, for which the disbursements are pending and likely to happen in the Q1, Q2, Q3 onwards now. There are another 21,000 crore of the approval, which we call it as a NBG approval, which in this financial year we have given and for which the sanctions are awaited. There are around 28,000 crore of sanctions we have given in 25-26 in 1.5 months time itself. So all put together, we have 1,35,000 crore of corporate book in our kitty for which the disbursements are going to happen in this financial year. So this is one strong book is there with us now.
Absolutely, sir. I mean, that's well explained, and we now understand where your confidence is coming from, even if that overall growth number is a little lower than FY25. But what about margins, sir? There's been some pressure, and going forward, it's going to be, all about how quickly you can reprice your deposits lower as the RBI cuts rates. There's been some pressure on margins in Q4. You are at the domestic NIMs I'm talking about, 2.96%. Will margins fall more in Q1, Q2?
I think margin which we have already bottomed out now, and this is the scenario is going to be in the Q1 and Q2 also. And the direction also which we have given to the market is in the NIM will be in the range of around 2.8 to 2.9% overall throughout the financial year. And especially for this Q1 and Q2, I think definitely there will be some pressure on the NIM and we will be in the range of around 2.8 to 2.9%. See, whatever we have done in the last year on the deposit front and the deposit which we had mobilized, I think the cost of deposit has already bottomed out now. And I'm not expecting that any further growth and any further upside will be there in the cost of deposit now. Because there was one deposit scheme which a bank had launched for 400 days at 7.25%, which we have stopped in the month of April. And we have come out with a separate deposit scheme at 390 days at 7.10. And in the deposit other segment also, we have reduced the deposit rate by around 10 to 15 basis point. But impact of all those things will happen from Q3, Q4 onwards. So that is the reason I am telling that for Q1 and Q2, definitely there will be some strain on our NIM and NII. And the position which is there in the Q4, in the 24-25, I think that will be the position in the Q1 and Q2 will remain in the 25-26 also.
Got it. All right. Hi, Mr. Chandra. Good to hear your commentary and good to hear that, in fact, you've given a cautious guidance, but you're sounding quite optimistic about outbeating that. That's the sum and substance, I think, of what you're saying. A couple of questions. Yes. Cost of deposits, you believe they've peaked out. But the guidance you've given on the deposit growth itself is very, very, subdued. You're only talking about 9-10% odd. That compares with around 14%. Why is that? Do you think on this front as well you'll be able to outbeat, the guidance you've given?
Definitely the guidance, definitely we are going to outbeat. And the one reason, if you can see, the CD ratio of our bank is 71%. So there is enough room for us to grow in the credit portfolio with the existing deposit itself now. And that is the reason I think we have kept the deposit growth at the rate of 9 to 10%. Having enough liquidity in the market now and enough liquidity in our bank also, we have sufficient cushion to grow with this growth rate which we have forecasted.
All right. Besides the operational performance, your shareholders, your employees will be happy to hear, you're giving them a pat on the back and you're saying you're on a mission. So employees will be very happy. But shareholders will be wondering, do you all have a plan of unlocking some value? Maybe stakes you'll have in JVs and, other subsidiaries. Is there a possibility of some value unlocking that we should be looking at?
I think after assuming the charge, I have, in the very first opening remarks also, I have given the direction that we have 5 associates and 5 subsidiaries, and value maximization through the subsidiary and the associates will be one of the topmost priority for the bank. And I think all of you are aware that we have one stake in the Canara HSBC Life Insurance. There already the things are in the advanced stage. I think company is going for the listing. Maybe in the Q3, I think some value maximization will happen through that route. All other companies, we are not going to dilute our share in the market, but we are going to strengthen our position by improving their efficiency, by the resetting the skill set in that particular subsidiaries and associates. And through that route, we are going to generate a lot of values internally then.
So sorry, I missed that point. Which of the subsidiaries will list in third quarter this year?
Canara HSBC Life, already it is in advanced stage now, and it is in the public domain also. So that is one subsidiary we are going to get some value in the Q3.
Okay, and just very quickly, otherwise asset quality has been very steady. The only thing is slippages, have almost doubled. Was that one particular account? I don't know if it was MTNL or something, but just very quickly, 30 seconds on asset quality and what you expect.
Asset quality, if you see, we have done very well in the gross NPA per front also, net NPA front also. Net NPA is 0.4% and the gross NPA 3.95%. Yes, in the particular one quarter, Q4, there had been some slippages, and most of the slippages in the Q4 that has happened in the agriculture segment. That is 1,400 crore has slipped in that particular segment. And we are mindful of that. There were some restructured accounts were there, which was legacy accounts were there, and those accounts have slipped across the country. And already I can tell you that in that slippages itself, we have made a recovery of around 288 crore in this financial year itself in the month of April. So we are mindful of that, and I have already given the direction that our slippage ratio will be below 1% in 25-26, and we are going to restrict that. Even the MSME segment also behaving well now, and we are going to curtail the slippages further in the MSME and retail also.